What's up, team? Sean from Rest to Live here, and today we want to talk about Uber. We're going to dive really into some of the details from their investor day and their investor presentation, and also talk about a couple of relevant things that are top of mind for me here. So I don't want to waste any time. I'm going to start sharing the screen right away. As always, this is not financial advice. I'm not telling you to buy a stock, sell a stock, or do anything with the stock. What I'm really talking about is the company, where it's positioned today, how it's positioned against its competitors, etc. So without further ado, I'm going to share my screen and we'll start to talk through all this. Full transparent warning here. I own Uber shares. I have Uber options in the market, both selling puts and longer call options as well. So I am bullish. I'll tell you that right off the get-go. So just know that going in. Although I think there are some concerns I'll talk to. Largely, I feel pretty bullish on the stock, and I want to call that out right at the get-go here. So I'm going to share my screen right to kick things off here and not waste any time. So just last night before the recording of this video, I had a great call with Kris Patel from another channel. We talked about Uber quite a bit, and the feedback was people wanted to go deeper, see what's happening with it, why it could be a potential play, and it also has a potential to be much bigger than it is. So I want to start with the thesis of understanding what they're doing, how it's growing, how it's changing, how they're shifting their models, what this could mean from the market cap of the company, addressing the total addressable market that they have here, as well as what within that market is serviceably addressable as well. Now, before I start, I want to call this out. A quick comparison of their top competitor in my mind for a lot of folks is Lyft. Lyft is very similar in the fact that it's a ride-hailing company, but as we're going to see here, it is totally different. So if you keep comparing the two, you're going to get sort of a tough take on why these things are very different from one another. So I just want to call that at the beginning of the call here. And we're going to go really deep into the deck here and understand a lot of different components you probably haven't thought about. So strap in, grab a drink, watch this over a couple sessions, but there's a lot of value I want to try to get out here. First thing I want to call out, though, from the recording of our video last night, the stock went down quite a bit today. The entire market went down today, actually. There's really no relevant news here for why Uber is seeing this. So I want to tell you what I did. I jumped in today, and I bought both calls at some of these lows here, just over the $35 mark, as well as I sold additional puts in this space, too. So I'm calling this out so you can get a feel for the way I am acting on the fact that I still feel bullish. There's no news, and the prices come down even quite a bit more. Now, additionally, when we think about the difference between Lyft and Uber, we're seeing an approximate 5.5 times the market cap of Uber versus Lyft. So Uber is about 5.5 times larger from a market cap perspective, but I also think this might be way undervalued. And again, I don't want you to take this as financial advice, but really understanding the company and how they're expanding and moving to so many new markets. So I just want to call that out. At the recording of this, we're just under $35 a share, far below their IPO price. I actually want to spread this out here. Just give everyone a quick look at it. Of course, no charts available naturally, right? This is what happens when you do things live. Let me see if I can refresh this and get it to go here. Oh, isn't that funny? Well, whatever. We're not going to worry about it. So I just want to call that out. There's a lot of controversy around Uber. There's lots of different things we can point to and call out and say we don't love them, we don't like them. I get all that. I'm really not addressing that at the immediate moment. We're going to get to that sort of later on the call here. But what I want to do is jump into sort of the presentation here that was shared with everyone, because I think it's really important to understand where the numbers come from, what's driving some of this, etc. So without further ado, this is the deck from February 10th to be specific, 2022, where they really presented this to their overall audience as part of Investor Day. I'm going to call this out one more time. I am not affiliated in any way with Uber. I use Uber, I own Uber shares, but I have nothing to do with the company, not employed by, don't do business with them. I have no affiliation, no employment, nothing. So just to be totally clear, I don't drive for Uber, work for Uber corporate, or do business with them in my full-time life. Just calling that out, okay? So first and foremost, on the day that this was presented, these are the people who shared their thoughts on these different pieces. I like to give my perspective on this from the way that I look at it, because I'm not looking at it as someone who is part of the company of delivering my take in a positive light. I'm trying to look at the information and derive from it what I believe is the opportunity and what we should be focused on there as well. So I'm going to keep going. And as usual, I'm not representing the company here, but they've called this out that nothing in here should be perceived as forward-looking statements. And a lot of it could be seen as non-GAAP financial measures. So as we talk about some of the math and some of the financials, keep in mind, there could be unique ways that they've measured things. It may not be attributable to a true GAAP financial measure. So, take this as an additional layer of due diligence. Make sure you understand the numbers and what they mean, and ultimately what's going to happen with the company. I also want to call out too, This deck is 189 pages long. I am not going through all of that, so don't worry, we're not going to be here 4 hours, but I do want to talk about a bunch of the really exciting things that are going on, because my goal here is to sort of get you to start thinking about investments and the way you look at a company as more than just what you're told. I think the vast majority of people that I went out and asked prior to doing this, and I said, hey, what is Uber? Everyone said, oh yeah, it's an app on your phone and you use it to get a car to come and pick you up and drop you off somewhere. I said, what else do they do? They said, well, they have like Uber Eats for food. And a very few people, a handful of people also told me, I think they also can grab things like groceries or gifts, or not gifts, but like Christmas time, they were talking gifts. So it's really interesting to see like, wow, there's a lot going on at Uber that's maybe not what meets the eye here. So again, I'm just going to jump right into some of the stuff here, right? Pre-COVID, I think some of the things we really saw here was that, these are direct quotes that I'm going to speak to. I know you can read what's on the screen, but from the Financial Times, Uber shares driven higher by promise of profitability, right? We were looking at potential of hitting some of those big 2021 numbers. They gain big gains after analysts say results help with credibility. Uber moves closer to profitability. This was a big message at the time. And then basically everything kind of stopped here. And I think this is really great that they call this out. U.S. spending on ride hailing with Uber and Lyft fall as coronavirus spreads. Uber and Lyft are plunging, erasing recent gains. Uber riders are down 70%. Think about this for a second. Today, right now, we are still talking about a publicly traded massive company like Uber, who just survived the past couple of years of a pandemic that really cleared out the entire business space. Down 70% from a rides perspective. Think about that. That is wild. There are not a lot of types of businesses that don't have a level of diversity in their offerings that could survive for this long with a 70% decline in their primary go-to-market. So keep that in mind as we roll through here. Now, let's talk about what was released this day back in February. Their Q4 2021 results, $25.9 billion in gross bookings. This is up, of course, 51% year over year. 1.8 billion trips. That's a wild, wild number. I think I'm more surprised by that than I am even their bookings. But 1.8 billion trips, that's 23% increase year over year as well. $86 million from an adjusted EBITDA perspective, which represents a $540 million year over year positive, right? So just calling that out here. So there's some other things on here as well, right? 825K plus merchants are leveraging the platform. 8.4 million folks are earning with the platform. And there's just some good material like this that we're going to see here. So let's look at the longer term perspective here that they've presented, right? They've had strong growth from 2017 to 2021, irrespective of the fact that we were hit by this pandemic, right? We saw a 15% increase in MAPCs. I'm going to have to look that up because I'm not even sure what an MAPC is in this regard. So let's do that real quick. Let's take a look. Uber MAPCs. This is always kind of the fun thing, right? I love when you have to figure this stuff out. Let's see if we can get it in here. Monthly active platform consumers that use both of their products, right? So Eats and car service. So good to know that, right? So that's up 15% over that time period. Gross bookings per monthly active users are up 11%, and they have seen a 27% compound annual growth rate, or CAGR. Okay, so gross bookings have gone from 34 billion to 90 billion over this time frame, and a big part of this time frame, a big chunk of this was during the pandemic. Okay, so a couple of things they've done that are really interesting. That really, I'm going to be honest with you here. When I saw this, I was sort of taken aback by it as well. To think, well, wait, Uber, the simple car company, has done all of this. So what they've done is they've really moved aggressively to go into areas where they believe there's more growth, while divesting or pushing off areas that haven't, in an effort to really secure the future as the way that they see it. So they've divested a few things, right? Uber's delivery service in India, they've pushed off. Jump, they've pushed off. Freight in Europe, they've pushed off. Uber Elevate, they've pushed over, as well as ATG to Aurora as well, right? So what they were looking for here, and what you can see at the bottom of the screen, is they had $1 billion run rate fixed cost reduction. Now, from an operating initiative perspective here, what they're calling out is they've exited 15 plus subscale delivery markets. I read this as they opened up in those markets, they didn't deliver on the kind of numbers, metrics, or KPIs they expected, so they've actually stepped out of or away from them. We can see here that they also have jumped into some telecom JV opportunities. They've got more funding in and around the freight business, and they're looking at how they can reduce headcount over time as part of this opportunity to find additional CAGR and other operating expense initiatives, right? So just something to call out. Additionally, we've seen some interesting acquisitions. We've got Careem, Corner Shop, Postmates, AutoCab, Drizzly, and Transplace. Drizzly is one that was particularly interesting to me because every so often at work, I get gift cards from Drizzly. Drizzly is essentially a adult beverage wine and liquor store delivery service. You can use it like any other app to order, wine, beer, alcohol, liquor, whatever the case might be. And before seeing this, I actually didn't even realize that Uber had bought Drizzly, but it just makes so much more sense, right? Now I can have it delivered right from an Uber Eats or an Uber car to my house if that's what I want. And from a product development perspective, we're going to get into a lot more of this as we go here. They've been really looking at other areas they can focus on: grocery delivery, advertising, Uber Eats for business, that corporate approach to it, right? Uber Direct, Uber One, and Uber Reserve. If you don't know what all these things mean, stay tuned. We're going to get into it as well here. So the big takeaway that I want to give you guys coming out of this today is that Uber is no longer a platform for getting a car. Yes, it still does that. That's their mobility piece. But they've really segmented here in a big way into three key areas: mobility, delivery, and freight. This is what helps them to survive when things get weird or get rough or we have pandemics hitting, right? It's not just about delivering a person from point A to B, but also helping you do things like picking stuff up and bringing it to your home or to wherever you happen to be at that moment, right? So that delivery service now adds a whole new layer of functionality and ability to create profit and revenue tied to a platform that's already existing. Now, even more so, we're looking at freight. We can have the ability to bid on freight and have those jobs sent out to drivers who are on the platform as well. If you notice, I keep talking about this idea of platform. The platform they've built is very, very tough to replicate. That's why there aren't a lot of major players in this space. Funny story, going way back in the beginning of their days, they had the opportunity to actually buy Lyft and chose not to do it ultimately. The sensational version of it is ego got in the way. Other versions of it is they just didn't see the value when it came time to ultimately pay for it. But either way, what they've built here and over the years is a reason why there's not a lot of folks doing this at scale. They have competitors in the mobility space. They have competitors in the delivery space, to be sure. They have competitors in the freight space, no doubt about it. But what they also have is an app that's easy to use on your phone, very accessible, very accurate, and very easy. It's a frictionless experience. So as we're going through this more and more, I want you to get away from the idea of Uber as a car service and Uber as a platform as a service, or PaaS. So something that we can use for lots of different purposes. They can grow into different areas. They can really look at that total addressable market and then the associated serviceable addressable market and think to ourselves, not only how big can this get, but how big can each of these key components get within it? So don't think of it as a slice of the pie. Think of it as the pie growing and those slices growing with it. I think that's the best way that I approach this, from understanding what their scale could be, when they might, or if they could get to being $1 trillion valuation or even more. I'm going to call out what's on the screen here because I think it's a really good call out. They're servicing multiple multi-trillion-dollar markets with products leveraging core technology infrastructure that they own, they've built, and they've delivered on in 72 countries in over 10,000 cities. That's absolutely wild. If you're not grasping the sense of what this really means, I think it's worth calling out here. We are talking about being in 72 countries and having the functionality to use your app to be serviced in some way in over 10,000 cities. That's wild. That's absolutely wild from a standpoint of what they've grown, the moat that they have, how hard it would be for anyone else to come into this space. If I wanted to start a car delivery service in the next 6 months or a year, the amount of capital I would have to raise, the skill sets I would need to do so, and then the ability to fight legally to get into these markets as well and compete and out-advertise and out-friction them is mind-bending. This isn't to say there isn't anyone else who can come along. 100%, you never know, it could happen, right? Someone during our live chat on this topic the other night brought up the idea of what if Tesla decided to start doing it? And of course, my argument would be Tesla would make it more of a partner than a competitor, that they would both win. What if Google wanted to get into this market? Same thing. Seems like a partnership would make more sense. And this is sort of the way I'm approaching this, is that it isn't that they don't have competitors. It's that for those competitors to truly become advantaged from both a scale and a technology perspective, I don't think it's going to be a newcomer who's going to do it. It's almost a question of like, hey, could Lyft merge with a Grubhub, merge with a technology partner? I don't know what that would look like, but that's sort of where my mind goes, is even to get to this scale, it's going to take a massive merger and acquisition spree. And whether or not there's even funding available to do something to that size, I don't know. And then again, you still may not beat them because now you have to spend on the advertising front to beat it. So just to keep moving through, When we talk about an all-weather company, the idea behind this is that it can survive good times and bad times alike. I think what we've seen over the years here is we really were heavy on the mobility front. They've added delivery and then freight. And what we see when we look at where we were at one point, and of course, right, we've hit some tough times in the past couple of years here. We've seen some steady growth, but with that growth, we've seen expansion of total size of market, right? Mobility piece is slowly growing over time. The delivery piece is growing with it. And then that freight piece is starting to become a nice little cap on the top that I would expect to see grow as well here. And this ultimately is how you see companies grow and expand into big enterprises, bigger than they are today. And again, to call this out, we're only talking somewhere around about a $70 billion market cap for a company that quite literally is servicing any human being on the planet who needs it, whether it's a ride, whether it's be delivery, whether it's to move products, goods all over the planet. It's pretty significant. And there's a lot of things they can touch on from that front as well. So look, here's the deal, right? From the mobility perspective, which is really the people moving, they're a global scale with lots of leaders in different areas who are very specialized to the ecosystems they're in. And that's why they're able to deliver so well. Now, these are their words, not mine. So I want to call this out, although I agree totally that delivery, the goods part of this, right? The Uber Eats, the groceries, the items is now a total part of normal life for a lot of people. When Uber first hit the market, the idea of using an app on my phone to get a car to come and pick me up seemed so foreign to me. Like, I don't know who this person is. A cab has to have a license and a mark on the back. You know that it's a cab. You had to go and wait in a line in some places to even get a cab. Now, if I need a ride, the thought of having to call a cab company, have them send someone over, who knows if they're even going to show up, it's very hard to track it. And the idea of just hitting a button on my phone, it's all taken care of. The credit card's on file. It's easy to tip and give a review. It seems so easy. And the space of Uber Eats and delivery is the same kind of motion, whether it's a DoorDash, a Grubhub, or anyone else for that matter. It just feels so easy and so simple to have these things happen automatically. Now, there's arguments for whether it's worth it, what the value is for the end consumer, whether the people who are doing the work are being paid in a fair fashion. I think those things are going to further sort of suss them out as we go into the future here. But as it stands today, I think a large part of the generation between sort of like, let's call it even 25 and under, that number could probably move a bit. It seems totally normal to jump into an Uber, order your food and have it delivered by a normal person in their personal vehicle. And I think that this speaks to the fact that there's a lot of crossover into potential other markets as well. I think about Amazon and that last mile delivery. Well, I mean, this is really getting down to that specific. I want to order something from anywhere at any time and have it delivered when I need it. It sort of takes that approach of like that warehouse where they load up 1,000 packages and shrink it down into true one-off delivery service. So I think there's a big TAM there that's largely untapped. Now, this one is particularly interesting. The transportation and logistics industry is massive, okay? It is absolutely massive. So there's a huge call out to be made here with the fact that they're only scratching the surface of what this operation looks like. So they've already really handled this sort of like last mile delivery, both from a people and a goods perspective. This ability to be playing in the logistics and transportation game, bid on projects, deliver them from one coast to another, regionally, super regionally, whatever the case might be. This is a huge and untapped resource that not a lot of other folks are necessarily doing at scale. And it's only furthering the platform to control the entire process from creation point to endpoint to delivery point. So I think it's a really good call out here that logistics is going through a major change the way the market works. So again, let's jump back into the platform for a second here. I talked about this briefly the other night, and I want to call it out again here. When we think about why a platform works so well and why it's able to scale, it's because it's a dual-sided marketplace where everyone involved is getting a benefit from better scale, right? So if you think about it on one end, Uber, the company, the corporation, needs to find more value, more revenue, more profits in the way that they approach things. As a consumer and a person who's leveraging the platform to make a living, as they call it here, an earner, it starts really simple. We just need to acquire users on both ends. We need people, and we need people who want to ride in the car. We need people who want to drive the cars, and it has to be done in a way where it creates value for the company. It starts to build something, right? That's the acquire users phase of this. Once they're on the platform, it is not difficult to transfer a user of an Uber ride into an Uber Eats customer. And if you can then find a way to build more loyalty management, more of a recurring theme around this, and start to offer things like membership programs, loyalty benefits, now the value to Uber continues to rise at scale, but the value to consumers and the folks who deliver and earn their living here also increases with it, It's not just rides, it's also deliveries. It's more consistent earnings, perhaps, right, according to what we believe here. And from the consumer perspective, it's really simple for me to get what I need when I need it, whether it's a ride or lunch or something in between. So just a good call out here, I thought also. And this sort of just speaks to what we're talking about here, right? Look at the ease of use of this. I know if you're maybe on the younger side, this feels very natural, but I can assure you, delivery used to be really a pain in the rear end, right? First of all, I have to find a takeout menu. I have to call, and then I have to be screaming into my phone to try to hear over all the noise in the kitchen. Oftentimes, they don't even know what I'm saying. I get the wrong orders all the time. And then you have to give a credit card over the phone. You have no idea if it's being written down, who else has access to it. Then a lot of times the order gets there, it's completely wrong. You have no recourse, right? There's no one to argue with. And it could take an hour. You have no idea where it is. You have no ability to contact and say, hey, knock on my door, don't ring the bell, leave it outside, whatever the case might be. This experience of all of these things is so simple. I mean, even the ability to do things like reserve a ride ahead of time or ask for a delivery at a certain time because I know I'll be home. This isn't a dig on FedEx or UPS or anyone else for that matter, but rather just speaking to the convenience of having it all right here at my fingertips in a really easy to use user interface like you're seeing here. So just again, something that I think is worth calling out: ease of use, frictionless, all in one place. Just all the more reason why when I look at this, I think, is a $70 billion market cap, not to say that that's small, but is that really reflective of the value from a global perspective, an addressable market perspective of what they're bringing to the table? I don't know. I don't know. And if my thesis is, and again, I'm really calling this out because I want to be super safe with anyone who's watching this. Don't take my advice. Do your own due diligence and research. But in theory, over the next 5-10 years, do you believe that it is possible for Uber to become a $1 trillion company? Well, then they're going to have to, 12, 13x from where they are today from a market cap perspective. And in turn, we would expect those shares to have to 12 and 13x, of course, as well, barring any new shares, buybacks, et cetera. And as the company continues towards being more profitable, this could mean things like buybacks, making the shares more valuable as well, or potentially down the road, dividends, et cetera. I have no idea, just saying there's lots of things that can happen. So the reason why I'm going through all this, and I'm not done yet, but the reason I'm taking a pause here is if you're this far into the video and you're thinking like, I get it, maybe there's an opportunity here. For me, what I'm trying to identify is, do I have a 10 bagger? Do I have a 10 or 15x opportunity where I can move into a position and see exponential growth of my investment? That's what I'm trying to prove out to myself. And when I do these kinds of videos, that's my goal. I want to share with you how I approach understanding what's being shared with me. I cross-reference it with current news, with other pieces of information I can grab. But these decks are a great way to organize thoughts and see a lot of the positive stuff. So keep in mind, there are not going to be a lot of negatives in here. But again, very positive. So let's keep moving. I actually just mentioned this a moment ago, but I want to call it out again, right? The reason these sort of ease of cross-sell works so easily for a big company who has a platform approach is that when it's super easy and frictionless for me to get the things I need, I'm less likely to move to someone else's service or app. It's also easy for me to get a ride and then feel totally comfortable ordering my food off that site as well, or saying, hey, can you pick up groceries down the street for me because I'm too busy with work today? And that's the idea here, is that promotion between these different services within the apps lowers the overall cost from an advertising and marketing perspective, as well as increases the likelihood of retaining me as a paying customer. So this is where the scale comes into play, right? Step 1 was the car. Step 2 is the people. Step 3 is the goods. Step 4 is the freight. But the more easy the approach to me getting on here and using it, the more likely I'm going to keep doing it. And they've done a really good job of making sure it's super simple. Now, Uber One, right? Uber One is the idea of now taking all this and putting it into a membership package, right? So they offer a monthly recurring cost. And with it, you get certain benefits, right? You might get free delivery on goods. You might get some pricing discounts. And depending on how often you use this could be a big thing. You might also get priority service, perks, different loyalty benefits, et cetera. I know you can read what's on the screen, but this is really the natural movement here, right? We're even seeing this with like TV channels who are offering paid versions of the TV channels to just get exactly what you want on demand whenever you want it. This is a brilliant plan in terms of now really Amazon priming the membership, right? It becomes really worthwhile, not only for me to pay a monthly fee because I'm getting so many other savings, but for them to have that predictable recurring revenue to understand what the membership looks like, how it's growing over time. I'm going to talk about this again towards the end, but the data they're gathering on the world, on the way people go to work, where they're coming and going, the times that they travel, the conditions on the roads, where they get picked up and dropped off. The amount of action we can take with this data is, I would almost argue, insurmountable in a sense, to think of what we can learn about consumer patterns and habits and spending, and then the associated advertising that will come at that at a premium because it's hitting at the right place at the right time based on the right historical understanding of what people have done. Now, again, you might hate the idea of that data being out there, and that's totally fine. But from purely a perspective of the company and the investment, it's wild to think about that at scale. Now, again, additionally, from the earning perspective, if you are someone who is signed up on the app and this is how you make your living, maybe it's a side hustle, whatever the case might be, the more types of jobs you can get across different types of opportunities, you can really start to maximize your income as well. Full transparency, team. I'm not suggesting that anyone is making millions of dollars by doing this, but what I am saying is it is a way to potentially think about growing the income stream you have by doing lots of things. Like, hey, maybe there's no one who needs a ride right now, but there's some things that need to be delivered, picked up, and dropped off, etc. It just gives you more options from that earning potential as well. I don't have really good or strong, accurate metrics on what people are earning. I would love for you to share yours if you're doing this. In fact, I'd love to see that. And I've got great anecdotal stories, but I'm not going to share them because they're too anecdotal, they're too one-off. I don't think it's a true assessment of what it really means. Now, the other piece of this as well, I was so excited when I saw this slide in here because it made me really think to myself, like, wow, this is exactly what I would have wanted to see. Leveraging the platform to scale new businesses. Think about this for a second. You open up a brand new restaurant in town, and you're thinking to yourself, like, geez, you know what? How do I access a whole bunch of folks already who might be looking to eat at my type of restaurant, right? Whatever it could be any type of food, specific or not. And how do I get this in front of people who maybe are out ordering food anyways? Well, with an integrated app like this, where we can understand the data and the way people use it, it would be very easy for me to go and advertise on Uber and put this directly in front of a consumer to make it really easy to order food from me, right? Paper advertising, door hangers, putting them in the mailbox, leaving in front of an apartment building, whatever the case might be. That is not an efficient way to advertise to markets at scale. If I can advertise on platform to people who are already looking to eat, it's going to offer me the chance to have a really good conversion rate. And if it doesn't, I can understand maybe what I'm doing wrong, what I should change about the way I'm putting it on there. There's a lot of feedback loops here that get to happen that help me to grow and scale my business that's unrelated to Uber completely, except that they're going to offer me delivery services. So think about that for a second too. Like, it becomes a point almost where you have to use this. So from Uber's perspective, it means there's a captivated audience as well, because if you're not on the platform, it's very likely you might be missing customers. So just a call out there I'd make as well. Now, again, this is the part that probably from my investment thesis perspective, I've been talking to, and this sums it up really nicely. And again, if it sounds like I'm like a fanboy, I'm not. I'm an investor. I take this very serious. I want to understand everything I can about the company, about how I'm working, about how I'm delivering. But I'm going to tell you right off the bat here. When you look at all these things, this speaks to massive amounts of expansion in hugely different areas, from the data to the platform to mobility to delivery to the freight to everything else that's coming. And we're going to get into some of that as well. That's even mind-blowing, frankly. But let's call it what it is. Uber has a massive lead in the position within this TAM, across multiple TAMs, across multiple services here. They're the leader in mega huge markets. The platform, as I think we've really discussed at scale to this point, offers a massive amount of scale, but also huge value to the end user and to the folks who are using it as a source of income. And their growth and profitability are trending in the right direction, notwithstanding the pandemic issues that we all saw. So just to call out again, like, these are areas I really focus on. Now, at this point in their presentation, they switched over really specific to mobility, and they had one of their executives speak to it. I probably won't do it any justice to what they did, but I want to call it out anyways. There's some really good slides. I'll speak to them quickly here because I don't want to keep everybody on here for hours today. In 2011, Uber was operating in 8 cities. 1 decade later, 10 years later, they're in over 10,000 cities. That is pretty wild, okay? And of course, there might be some caveat in how they measure this, but either way, you get the point. This is massive, exponential, explosive growth. So really good opportunity to see this continue growing as well. And I think that's what's got me excited here. And again, this even pushes me towards the fact that, are we really at the right value of this company from a public company perspective? That's the part that I keep asking myself. If I'm looking for the opportunities in the markets, in the data, in the opportunity, is this a place I could potentially see a 10x return? I don't know for sure, but my early gut feel is, based on the way that I'm looking at the data, much beyond just the things we're sharing today, I think there's a bigger opportunity here at play. And I think the way I'm going to play it is going to be an interesting part. And maybe I'll talk about that at the end a bit as well. But let's call it what it is, right? It's the largest mobility platform in the world. We already covered the fact that they're in lots of countries all over the planet. They have local leadership, which gives them the ability to understand local laws and local issues, while still rolling up to that corporate global scale perspective. So in the 10 top markets for this business, they are leading in 8 of them. They have a run rate gross bookings of $45 billion in Q4 21. And again, 90% of global gross bookings from markets with a number 1 category position. That is to say, let me rephrase, about 90% of global gross bookings are from the markets where they're top in the market, and they're 8 out of the 10, they're top in the market. Now, I want to call this out also. Knowing how to go to market for a platform like this is equally important, in a sense, from just thinking about where and how to operate, how to shift your go-to-market based on different laws, different rules that exist. Now, again, I want to call it, this is from February 10th. So a lot of this can have changed in the past couple of months here, but I just want to give a general feel for what's happening. They own operations broadly throughout most of the world, and they also have some sort of either minority-owned affiliate or a JV position. A JV position is like they're invested in but don't run it necessarily directly. So just calling that out, when you look at their presence throughout the globe, that is pretty wild. I mean, wild. And there's still a lot of room to grow, right? Largely the continent of Africa has a ton of room. A lot of the Middle East and Europe still are untapped. And even from the perspective of like key other outlying islands, other areas, these are big areas we can really focus on. So I think there's potential growth there at scale too that we haven't started to scratch yet. Again, another really interesting point of how things have changed from a mobility perspective. In 2011, and I remember this because, I was around trying to get cars back in those days, they had the black car service and the SUV service. Think livery vehicles operating on the platform. That's the easiest way to think about it, right? You need a limo, an executive car, you're ordering the Navigator for a night out on the town. 10 years later, we have 20 different services, okay? Uber X, XL, X Share, Uber Green. The black car and SUVs still remain, but now there's also comfort and the ability to do reservations. They've got taxis, motorbikes, auto bikes, shuttles. They've got specialized health-based shuttles, right, for folks who need special services. They've got intercity, hourly rates, rentals. They've got the ability to connect. They've got public transport. You got 2 wheels and car shares, all stuff available on the platform. Some of this will cross over, some of it won't, but just calling out the fact that they've really innovated, not only in terms of what kind of a ride you can get, how you can get it, and how it can be delivered. Really interesting stuff here. Obviously, I'm not going to speak to every flag on here because, frankly, I don't know them all. But they've really gotten to a place now where regulations have come into play. I think those regulations have largely, to be fair, in favor of them. And you know what? I want to call this out for a second. I fully expect that there will be further regulations that will be perceived as being very negative. I don't think they're going to be that negative. I think that this is a team run by very skilled leaders and executives who are going to be very prepared for what the regulations could be, whether they're positive or negative to the public view. And I think that that's the real benefit of being with a platform global leader, is they can shift gears very quickly to make sure shift gears. That was a great analogy by accident, right? Shift gears really quickly to go into the spaces where they need to shift on the fly, to make platform-based changes. And I'm sure they already exist today or can easily be built in as well. So if you're thinking about this and saying, well, look, there's a bear case because they could easily be regulated. 100%. I agree, they could easily be regulated. However, I think largely we know what those regulations would look like and can probably model out what would actually happen to the business if that was to happen too. So just something to call out. Excuse me. Now, this whole idea around mobility, and I don't want to read every slide, I promise I'm not going to, but their sort of North Star here is how do they make the journey better, right? Better ride penetration, more use cases, scale sustainable, lower cost products and go to markets, develop alternatives to individual car ownership, and lead the transition to electronic autonomous vehicles. Those last two I want to call out for a second. Develop alternatives to individual car ownership. develop alternatives to owning a vehicle. You say to yourself, well, I absolutely have to have a vehicle. It's not an option. Depending on where you live, that might be very true. But if you live in the largest cities in the world, you're generally taking things like public transportation. And when you're not, you probably don't need to own a car for $600 or $700 a month, plus insurance, plus maintenance, plus gas, which is through the roof, plus everything else. So if they can offer a plan, a membership plan perhaps, or a scalable solution, a low-cost ride, then you maybe don't even need a car. If you're only spending a couple $100 a month maybe on a ride share, or perhaps probably a lot less, that's far better than having to go and have your own. So maybe you can even rent a car. Maybe that's an option here that Uber can get to. And they are already doing that, but maybe more at scale. And I think this last point is really interesting. Leading the transition to electronic and autonomous vehicles, I think by being prepared for this and having it in the roadmap means when this does happen, they'll have solutions in place for it, as well as the ability to scale to electric when, scale to electric when it makes sense to do so. So I think that this is what the future looks like. They've got a very clear journey here on how they're going to get there. And again, it speaks to sort of the overall TAM and protecting it into the future. So I'm going to skip over some slides, but I want to talk to this, right? The rideshare penetration is really low globally, even in markets that are considered to be their biggest, right? So some of these numbers are a little bit outdated, as you can see here. So I just want to call this out. Like, look at these overall numbers for rideshare penetration. I mean, no one on this list here is even over 10%. I mean, Germany and India, I would never have guessed under 1%. The US is under 4% here. I would not have assumed that would be the case, right? So really interesting, a lot of room to grow, huge penetration still available. Even more so, we look at these things, right? Look at these numbers. I mean, holy moly, like what it could equal from an annual growth rate or annual driven revenue. It's absolutely wild to think about. This is where that growth comes from. And in specific areas, in this case, they're calling out Spain, Germany, and South Korea, where Uber isn't really a known, it's not that popular. They believe they can generate an additional 2 billion or more in gross bookings just across these folks in 2024. So that's another 2 billion in gross on top. Excuse me. Now, we are extending this obviously from a perspective in their eyes beyond just the UberX experience, right? 90% of our trips are on some version of UberX. It's either solo, on-demand, point-to-point, or four-door car transportation. Less than 5% of trips are shared currently. Only about 1% are scheduled in advance. And 4% of trips are with motorcycles, autos, and taxis, right? That yellow cab style service. So these are all areas that can really grow at scale as well, which is going to generate more from the top and bottom line perspective, you would imagine. And as an investor, that's the way I'm approaching it. Now, one thing I want to call out, because this is important for someone like myself, I travel quite a bit. It's a pain in the rear end to get rides in some areas. When you land, it's late at night. It's impossible to know if there's going to be a cab there or not. And let me tell you, a lot of times they're not there, especially when I'm in very cold environments. You're jumping out of that station into 0 degrees. What do you do? Well, I'd love to know that there's a car waiting and that I can confirm not only that it's there, but where it is. I think this speaks to the idea of reserve, to pre-book transportation, know and see where they are, and communicate with that driver really easily. In years past, because I've done it, when I needed a car for, say, 3 a.m. to get to the airport at 5, I'm just hoping that they're going to be there in the morning. And can I tell you how many times I've woken up and they're not there? And then they say, oh, something came up, or sorry, I thought I left you a message. And now I'm screwed. I'm missing a flight. There's huge value to the ability to do this. Now, again, even more, they can focus both on the reserve perspective for anywhere, do it from the perspective of tracking my flight and being there when it lands for me. And even more so, I love this one too, the Uber hourly, to be able to have like a driver essentially for whatever I need. I think about this and think about the opportunities it opens up, and you can have curated experiences, right? Say I want to take my kids somewhere I've never been before and show them some cool areas, check out the nice restaurants, look for areas that other folks don't know about. This is an easy way to hire a driver who's local and knows the area to show me what a day in the life looks like, where locals go, what's cool to do that would be off the radar of a standard, TripAdvisor approach, right? So these are just all additional areas that they're not leveraging that could really grow and offer huge penetration in this market as well. And then this one is absolutely wild. The current global hailable service, so think calling a cab to come over and pick me up, is still 2 times bigger than the total size of their mobility business, representing about 120 billion plus in annual consumer spend. And there's over 20 million licensed vehicles to offer this service. So what if they could get these cars on the platform as another source to hail a yellow cab or a taxi or something similar? Well, there you go, right? I mean, their goal here is how do they get all these taxi companies to start to leverage their platform, right? Use their technology. Well, that's the goal. That's what they're trying to do. The value as they drive here is it's incremental earnings for the drivers. They can get more of those consumers on the platform, and they can also leverage the tech and safety aspect of it. We haven't talked about that, but that's a big call out too, the safety aspect of using the platform. The value for the riders, they know exactly what they're going to pay before they get in the car. It's a door-to-door service. They're being picked up exactly where they order, and they have those safety features. I'm going to stop and pause again here, not to be annoying, but if you've ever been in a big city and you jumped in a cab, I'm telling you, it is never the same price. I can go from the exact same spot in front of Penn Station in New York to my office down the road when I'm in New York, and it's never the same. I'm not going to say it's wildly different, but it's not always the same. I have no real idea what the quality of the vehicle is going to be when I get in. I don't have an idea if this driver knows where he's going. Also, sometimes if you're from an area that's not a major city, you can think you're telling the correct address and actually be saying it wrong or in reverse or saying the numbers the wrong kind of way. It happens all the time. This is a way to make sure they know exactly where you're going and you know exactly what's going to cost. Now, of course, the big piece here from Uber's perspective, the value is obvious. An additional source of supply of vehicles, new markets and segments that already have dedicated services in-house from those cars, and also not having to completely build fresh from zero. There's already an existing workforce and existing fleet there. It's perfect, right? So right now, as it stands, there are Uber Taxi is live in 27 countries. They've seen significant growth, as well as a lot of new taxis have joined Uber. So just another interesting point that I want to call out here. So multi-product riders tend to spend more, right? Better retention. Personal vehicles continue to represent the vast majority of mobility trips. So just take a look at that, right? Uber Black versus Uber X Share. Looking at the total public transportation market as it exists, and then looking at the total personal vehicle market. Like, I feel like I'm looking at a solar system map here of like the sun compared to the planets. It's absolutely wild to think about this. And again, these are areas that can continue to grow and scale and really are still only scratching the surface, frankly. Now, I don't want to go over too many slides here, but I think it's important to understand certain callouts. UberX Share helps to, from from the environmental perspective, the goal here is less cars on the road, less congestion on the roads, more people sharing when it makes sense to do so. So fewer cars, more people sharing rides. I know with the pandemic, that's been tough. Hopefully that's where we get back to, okay? Because the platform will automatically find folks to share the ride. We also save money on that ride as well, potentially. So that's something to consider too. So let's keep going. This is one I really love. High capacity vehicles that offer a bus ride for everyone every day. Think about how many times the same people might have to get on the same bus, wait for it in the cold, traveling to the same places. These are ways to start to think about getting in and around that by delivering a better service with more consistency. You know where it is, you know when it's coming, and it's safer. You know who's driving potentially, you know who you're with, right? I think that these are key callouts that people who have to drive on some types of public transportation. And again, I'm not talking major cities here, but if you're in an area where everyone goes to the same warehouse every morning and you're all taking your own car and you're all doing it in your own way, maybe there's a quicker, easier way to do it. And this is another opportunity to scale. And it's important if you're watching this in the US to take yourself out of your local municipality and understand there are a lot of places in the world where it is not safe to jump into a bus at night. You don't know who might be driving or who else is going to be on it. And again, that's a whole nother issue than what we're talking about today. But I do want to call it out that this offers yet another opportunity and yet another area to focus on from a TAM too. So look, right, emerging economies offer all kinds of opportunities here, whether it's autos and motos. I don't want to speak to all this. But the other big piece of this as well is the driver base is the key to driving all of this, not unironically, right? So what they're trying to do is a couple of different things to ensure more people keep driving, keep doing deliveries here, right? A growing and engaged driver base is critical to our success, according to Uber. I, of course, as an investor, agree. They're making investments in driver growth over time. They have a 2x monthly growth rate, right? So it's up 25% year over year. And Uber's platform offers what they're calling multi-gig flexibility that other vendors can't match. So obvious points as we sort of spoke to earlier here. The multi-gig flexibility means that I can offer mobility, the driving of people, and doing the deliveries of those goods, all from the same platform, all from the same trip. So maybe I know I'm going by a grocery store on the way to someone's house, and in between there's an opportunity to do 2 jobs in one. It's a great way for me to do that. So it's additional source of revenue for me as a driver as well. Now, I don't want to talk to too much more on the mobility front, but they're doing more things like longer distance, multi-day offerings, which means that whole effort to get rid of the car piece maybe can start to come to light. Again, not everyone can get rid of the car, of course, but I bet a lot of people could if they had an easy option to get a car right when I need it, delivered to where I need it. And look at this, rental cars delivered to your door. How amazing would that be? My gosh, as someone who travels for work, waiting in line, especially at night and early in the morning, is a nightmare. And most of the rental places have 1 or 2 people working, and there could be 40 or 50 people coming off that plane looking for a car. And of course, they also have P2P car sharing as well. I think there's other services, again, that do this, but not in an integrated platform with such an easy UI. Obviously, they're really focusing a lot on emission-free mobility. We know autonomous vehicles are a key part of their future. Since it's not there today, and I think that it really speaks to something that's not ready to be talked about in my mind yet. I'm going to skip past this, but just keep that in mind. This is a focus of their overall platform, right? So again, they're trying to drive significant value for their partners, for the users, for their operators. And again, they are expecting massive growth with what they're calling adjusted EBITDA in 2022 of record gross bookings. Probably not hard to believe that this is going to be the case, just based on those previous slides, and this should be reflected in that market cap as well. So again, right, we started this section off with this and we'll end it. Deepen core penetration, expand use cases, scale sustainable low-cost products, alternatives to individual ownership, and transitioning to electric and autonomous vehicles. That's really the big thing. Now, again, let's shift gears over here to delivery for a second, right? I'm going to go pretty quick on this section because I think you're getting the point, but I really want to call a few things out. Delivery is now 3 times larger than when the pandemic began. I'm not surprised to hear that, but I bet a lot of people are. Folks did not want to leave their houses. There was a lot of fear out there, but yet growth kept happening. So first of all, a round of applause for all the delivery drivers who are working and getting stuff done for everyone out there. But it proves the model that it's doable and it works and people are willing to leverage it. And I think that this is not something we're going to see necessarily slow down over time. And I'm sure we're barely scratching the surface here as well. So, and just like that, right? Significant headroom to further penetrate the core categories that they serve, right? Both from the global restaurant delivery perspective, as well as the global grocery spend. Couldn't get the word out. So restaurant spends 1.8 trillion globally. They did 49 billion in gross bookings. A lot of room there, right? 2.5 trillion in global grocery spend, only 3 billion in gross bookings. They could easily double, triple, 10x and still not even be scratching at the TAM that's out there. Think about that for a second. That's just on delivery. So again, I called this out earlier with the local restaurant, same kind of idea. This isn't about a gigantic warehouse with 1 billion products inside of it. It's about shopping and integrating with the local community, the places I want to see succeed, the places that give back to the sports in town, the education, etc. So this is an easy way to take advantage of that. Look, we already know because we've covered it. They're not just another delivery platform for food. They integrate everything. It's products, goods, all kinds of different cool stuff here. I'm not going to speak to all of it, but I do want to call that out. Now, this is, again, their own words, but speaks to the value we've been talking about this whole time. The largest food delivery platform, excluding China, best positioned to capture the on-demand delivery opportunity. So per what you're looking at on my screen, they're active in 32 countries and territories and have 11 priority new verticals and countries that they're focusing on. They're the leading vendor in 7 out of the 10 top markets, a $54 billion run rate gross booking, and 80%, again, of global gross bookings saw year-over-year category position gains. Now, unlike the mobility piece, they have a lot more room to go here in the delivery aspect, right? Here's where their owned operations are in green and they have equity stakes, so they own a piece of another company in other areas in the world. So again, a lot of gray here, a lot of places we can really focus on for growth. Segmentation of profitability has been expanding, which means more reinvestment into those growth initiatives. This is huge. I don't want to speak too much to it because it's going to get into the weeds that I don't want to get into, but I want to call that out. So again, really good numbers across the board. They're outpacing growth. We're seeing, again, industry-leading tech is driving material cost savings, which accelerates the ability to reinvest. So because of the platform, because of the way they go to market, more and more and more of what they do gets to go back into the business and further differentiate the platform and expand into those areas and then have tighter and better margins and revenue in those spaces, right? So they can target with machine learning and they can get active dynamic pricing based on algorithms and all the data they're taking in. So I know I'm covering a lot of material, so I don't want to hit you with too much here. And then additional, right? International markets are really where they're going to see massive scale growth and profitability. That's likely to continue to go. That's my opinion, to be totally clear. Do your own due diligence, but it does look to be the case. I don't want to speak to any specific markets here because I want to keep moving, but again, like, look at some of these numbers, right? Online grocery is a large, underpenetrated opportunity. They're either a number 1 or strong number 2 category position among on-demand delivery players in 8 out of the top 10 priority markets. And in the US, Corner Shop and Drizzly acquisitions provide strong foundations to accelerate growth. So I think about this like your local little convenience store or your beer and liquor provider in your network. They're even working at that scale. So really small scale too. And again, I know you can see the numbers on here. Excuse me. So again, they also think that grocery is just that first page into getting really big into retail. This is super interesting because once they get you on the platform for mobility and now groceries, it's not hard to believe you're going to want to start doing so much more, right? Not just grocery, but picking things up at a Target or anywhere for that matter. I don't want to even speculate on where. It's really anywhere. I think that's really interesting. And look at the way this has grown over time here, right? This, of course, is speaking specifically to Chile, but their non-grocery retail versus the grocery retail not only is overall expanding, but the categories are expanding along as we go. So again, not only are the slices of pie growing, but the pie is growing too. It's really important to see that when you're looking for big opportunities. This is a key focus area for Uber as well, right? How do they strengthen both grocery and retail product experiences, offering the right selections? They can purchase in different ways. They have a unified suite of products, all supported within the payment systems, etc. Right? Really, really good stuff here. And again, I called this out earlier. I'm going to call it out again for the sake of conversation. You can schedule deliveries. You can even change and modify post-order. It's a real shopping experience, and it's a best-in-class out-of-item experience. So if you're looking for things that aren't available, they've really developed a program or a platform piece here from a technology perspective to further enhance that and make it easier for you to work with it and make decisions based on what's available and not available. We've had things delivered with another platform, not Uber, where they just make a decision on what to bring you. And when you're asking sometimes for very specific things and you don't know the reason why it's so specific, bringing in the wrong thing, even if it's close, might be completely wrong in the first place. So just having a better experience with that, I know in my own household will be something we'd really like. I don't want to talk too much here. It's a lot of really big stuff. But again, I speak to this several times. I'm going to speak to it again. The last mile logistics opportunity is a $200 billion current marketplace. $200 billion just right now. And this is really a new experience, this last mile logistics, okay? So it's a big deal. It's something they're focusing on. They're continuing to grow. Some really good stuff here as well, right? Deeper penetration into restaurants, more cross-sell and upsell with engagements across new verticals, and then further adoption of all of this tied to that membership on Uber, right? So you're getting benefits. There's no reason to give those benefits up. It's a predictable monthly cost. They can do a lot with that from the standpoint of how they're growing and offering services as well, based on the data they're learning from those memberships. So look, last big piece of it is freight. I don't want to go too crazy here, but I think this sums it up really nicely. Freight is a major problem. It is really hard to move materials all over the planet, right? No matter where you're located, it is an issue. This is why store shelves are empty. Getting things to where they ultimately need to go is challenging. Not everyone is driving a truck. Not everyone wants to do that for a job. But if we can make it easier to do it, more profitable, offer more opportunities, I think potentially more folks are willing to jump in and see what's going on there. So if anything sums this up, it's probably this slide here. Trucking is literally the backbone of the global economy. And if you see a trucker, thank them for what they do, because they're driving everything forward. And I don't mean that to be funny. They really are. It's a $4 trillion global market size. And the US market size alone is approaching 4 trillion. So just think about that, right? 884 billion US market size as of the quote on here below, right? And 70+% of everything sold in the US moves on a truck. That's wild. I mean, I don't know what the alternative would even be, but it's still wild to see that and think about almost 1 billion market size and 70% of everything is on a truck. That's wild. But here's what we do know. It's a broken industry ripe for transformation to help everyone who's involved, right? Drivers are aging out and new drivers aren't coming on. It's super inefficient, a lot of microcosms of individual small businesses trying to work together. There's 17,000 brokers working in transportation and logistics, and there's a cost per transaction that is growing over time and getting expensive, right? Shipper costs are skyrocketing. You can see here it's up 43% year over year. And from a shipper perspective, over 20% of tenders are rejected, and logistics cost about 5% of revenue for shippers as well. So these are integrated costs of the modern world that many of these folks don't have the technical functionality or the platform to do at scale, right? And the other piece of this as well is, do you have any idea how many of these trucks are on the road are completely empty because they didn't have something else to pick up after they dropped off? You can double your revenue as a driver, as a trucking company, by making sure you always have something in the back of your truck. And this means less empty trucks, less emissions, less bull crap to deal with, more revenue for the people who are doing that job. Something really important to talk to. Now, again, there are massive opportunities here from a digital freight marketplace, right? 17 billion freight is under management. They want to be number one in operational efficiency and number one from a digital fleet perspective. So I'm just calling this out. I know not a lot of folks necessarily work in T&L, transportation logistics, so these are just quick callouts I want to put on the radar here. Excuse me. So here's how they want to look at it from redefining the economics of truck ownership perspective. This is, I go out, I have my own truck, I drive that, I fill it, I deliver it, I get paid, right? We want better utilization of routes and opportunities. We want better efficiency, right? Making sure I know exactly what I'm picking up, where, what it's going to cost, and what my margins will be on it. I want to be paid right away. I don't want to wait and hope that I get what I'm supposed to get. And also loyalty is a big part of it, right? From an operational expense perspective, how do we know exactly what we're getting, have a consistent and positive experience? These are all things they're working on at scale. Now, again, this is a really cool piece here. This is going to allow them to have access to over 1 million drivers, which is essentially the largest digital fleet in existence. This means that all of those folks out there can bid on these projects, bid on the jobs, make sure they've got loads in the back of the truck, and consistently be making money and bringing that home to their families. And again, this is already something that's really important to call out. This isn't new. Today, they're already the platform of choice for carriers, right? They're number one recommended, and their carrier engagement on the platform continues to grow over time with a 48% compound annual growth rate across 4 years. That's wild. I mean, look, at this point in this, right, if you're still listening, and I hope you are, if you do not see the opportunity for why this is something potentially much, much bigger than what it is today, I don't have much else to show you because you're not going to see it. But this is wild. They're operating essentially multiple $100 billion businesses here at easily over time. Think 5-10 years how big this could be. Now, the other piece of this is the efficiency piece, right? Because of this flywheel effect of improvement, data comes back, improvement. There's a lot of really good things that help everyone in this process. I'm not going to speak to everything on here, but essentially, how do we lower the carrier costs? How do we lower the shipping prices? How do we lower ops pricing? How is it more reliable? How do we get more carriers on the road doing this, carrying more loads? And how do we automate this as well? Well, it's all through having a platform that has end-to-end coverage on this space. And again, the marketplace optimization is huge. It's not easy right now for a lot of folks to find the loads, get them in the truck, bid on them, and ensure they're going to get paid. This optimization effort is going to bring a lot more people to that platform as well. And the other piece of this that this efficiency creates is that the carrier costs will start to go down. So that 5% of revenue that you're paying out to get things delivered, hopefully over time can start to shrink as well. So again, guys, I don't want to go overboard here and talk to thousands of slides, but right, it's automation at scale. We can auto create, auto price, and auto book, right, from a Uber freight load perspective. It's a digital network, very easy to work with, great superior service. Ian, this is a good call out. Over 80% of failed loads are rebooked automatically with no humans having to be involved. So the system is learning to refill the backs of those trucks as quick as possible and make sure things are getting back on the road, back on the shelves, back to the people who ultimately need to consume them. I'm going to leave this here for just a second. This is one of those slides that I wasn't expecting to see when I originally went through this. This is like the NASCAR slide, right? This is the every name you can think of when you think big names in the shipping space. This is pretty wild. I mean, look at this. They're working with all of the major players in the world. I mean, this is a big, big thing, and it speaks to the value that they're bringing. And with value comes ROI. With ROI comes cost of ownership. With cost of ownership comes the deals, comes the people using the platform, comes the opportunity for Uber to continue to grow as well. I'm just going to slide through a couple of these really quick here because I don't think I need to go too much further. But they're taking fragmented markets and really bringing them together and putting them all into one place. And this is the power of what I'm saying from an investment perspective for myself, right? For myself, is there an opportunity for this thing to be so much bigger than it is? I think the answer clearly is yes. And that's really what I want to leave you with today, right? There is a ton more I can go into from a platform perspective that speak even more, right, to what we always talk about on my channel, right? Higher lifetime value and lower customer acquisition costs. Same for consumers as well as earners, right? The tech costs are lower, the time to market is faster, right? I don't want to get into all these things here because there's just so much to cover, but they're really focused on delivering the same experience to their earners, to the consumers, to ensuring better retention, lower customer acquisition costs, getting people back on the platform, really bringing people across different pieces of the platform as well. This is a cool one. I'll leave you with this. There's a massive opportunity to increase cross-platform earning, which means more people on the consumer side are consuming both as well, right? Just think about this for a second. Mobility and delivery are cross-threading more and more, and currently 23% operate on both. That's really, really significant. A really big call out here. So again, I could go literally all day about all the things they're doing and how they're working it, but I think it's the technology, it's the platform, it's all these different pieces combined that are why I feel good about this, why I get very bullish on it, as well as ultimately what I'm excited about to share here. So this is where I'm at. This is what I look at when I do my due diligence. I have gone through all 189 slides, and I can assure you it's worth the time to do so. But even if you don't do that, still look at everything. Look at the numbers. Look at the growth rates. Look at how they've survived and grown over time. Think about the hurdles it would cost. The cost to get over the hurdles if you were to try to start a company like this today, whether it's through acquisitions and mergers, whether it's through building new technology. What kind of money would you have to raise to make it make sense, right? So that's it. I'm going to leave you guys with that. Stop sharing my screen here. I think there's a huge opportunity here. You got to do your own due diligence, but I'd love you to give me your take down below on what you think that looks like, whether you love them, you hate them, and why, and what you think this could be from a total market cap. I'd love to hear what you think. So with that, thanks so much for watching. I really appreciate everyone out there. I appreciate those who watch. So thanks so much for stopping by. And I'll tell you one thing, if I need something, I'm going to probably hit that Uber app on my phone. So with that, have a good one, everybody.